Welcome back to the channel. As always, if you are copy trading, you are an absolute moron and you deserve to lose all your money. So today we're going to talk about a company that is well known out there, SHAK, a fast food chain, right? Is your premium McDonald's type of restaurant, so to speak. So owns, operates, and licenses Shake Shack restaurants in the United States and also internationally. So hamburgers, chicken, hot dogs, frozen custard, beer and wine. Headquartered in New York and with a market cap of 5 billion, which is good for a long, which is what I'm looking at the moment. That's also taking place in the hotels, restaurants, and leisure sector. And there are a few things why I think this may be a good time to start looking at it. So first of all, we have um, a dollar that is getting stronger following the election. So you can see here that it's increased significantly since October, and that is a good signal. It's good for the company because it's obviously heavily exposed to the US dollar as opposed to other countries where it also operates. But if we have a look as well at the University of Michigan Consumer Sentiment Report, we can see that the consumer sentiment troughed back in July and has been steadily increasing ever since. So the if we get a 1 year chart, it's pretty good to see. But if we put this into context, right? In July 2022, this index achieved, I think it was its lowest, yeah, its lowest point ever. And ever since, this indicator, which represents the strength or the optimism of the consumer, has been gradually increasing. As a matter of fact, it seems to be on an upward channel. And following the US election and the upcoming measures that the Trump administration will likely introduce, I foresee that this trend will continue. That, of course, is positive for the consumer, and it will be positive if it plays out for this company. So I think it's a good time to start looking at it. Now, if we look further back in time at what the company's been doing, you see it's a relatively young stock. Seems like it was listed back in 2015. And after that initial rally, right, struggled quite a bit up until 2017, and it's been steadily making higher highs. And look where we are now, right? So we're at a point that it just passed its all-time high and it's retraced a little bit, right? So to me, that signals that the stock might consolidate for a little while and then gain some momentum to break this level again. Let's call that's at around 130. So in terms of the growth trajectory and what they've been doing, they've been delivering quite consistent unit growth in the mid-teens. They expect to deliver between 80 and 85 units next year, but they still have plenty of white space opportunity, both in the States and internationally. And they're also successfully expanding into new formats. I'm not sure if you are familiar with the stock, but they're not that common on, for example, drive-through and roadside formats, and that's something that they're working on. At the same time, they also have displayed strong operational momentum. So 14 consecutive quarters of positive same-store sales growth, improving margins despite inflationary pressures, restaurant level margins expanding back above 20%, and they are integrating successfully their digital format with kiosk and driving higher checks. And let's not forget, this is a premium positioning brand. We're talking, like I said before, about a high-end McDonald's kind kind of business, right? So those type of organizations that cater to the stronger consumer are typically more resilient in economic pressure, which arguably is still perceived by the consumer. They also have a very strong brand equity, and they have announced they've put in place a new CEO, bringing new perspective and operational improvements. So that goes for a number of initiatives that have been rolled out. They have announced that they're managing cost pressures and they're going to continue with disciplined capital allocation approach. They also express that they're going to be very focused on continue driving efficiency and profitability. So at the moment, right, if we look at their balance sheet, it's pretty strong. So they have strong balance sheet with more than 300 million in cash. You can see that revenues are growing nicely every year. That's very impressive for this type of restaurant with good margins, right? And then that is pretty low, okay? And the cash from operations is not being great in the last it's not been great in the last uh, years, but it's definitely getting a lot better, right? So you see double digit here as well. So at the same time, you see decreasing capex, which is positive as well, right? We like that because that means that the company is spending less to finance its operation. Now, of course, there's risks with every trade, and all these operational initiatives that I mentioned before could could go through some hiccups in terms of execution. They have mentioned, right, that the drive-through performance needs significant improvement and more consistency is required across their whole geographical footprint. They also, if we have a look at the earnings, the last earnings, it wasn't terrible, but there were a few things that were not so positive. So you see a miss here on the EBIT and the EPS gap. The reason why that happened was because they are still experiencing high inflation, not only in labor, but also in the price of certain commodities such as beef, right? And of course, they need to maintain premium ingredients despite cost pressures. So because they cater to this higher consumer, maybe they're not as flexible as other businesses, as other companies when it comes to um, the product mix that they use in the food that they prepare. So with all those things, I think the company is in a very exciting spot. I do see this company reaching to higher levels in 2025. We may have a bit of a trouble on arrive, that's true, and that's why, even though I think is a good time to start looking at this stock, I'm probably not prepared to enter it just yet. I probably want to see a more attractive price for me to enter. And earnings at the same time will not take place until February. So there's still plenty of time to see what happens, but I'm definitely going to keep on my watch list. Hope you enjoyed the video. See you soon.